Investors are sounding bullish on the emerging crop of companies known as Neoclouds, but these stocks are not for the faint of heart. Neoclouds are building AI-dedicated computing infrastructure and represent the risky edge of AI investing. They're different from the hyperscalers like Amazon Web Services, Google Cloud Platform, and Microsoft Azure, which have been around for years. This emerging sector has issued huge amounts of debt in their build-outs, despite warnings of a difficult path to profitability. Some analysts say the companies aim to provide AI workloads at approximately a quarter of the cost of traditional hyperscalers. CoreWeave, the largest player in the space and one of the few Neoclouds to go public, has seen its stock price surge since its 2025 debut, with analysts expecting more upside as demand for GPUs remains high. Despite investor excitement, one lingering risk overhangs these companies: rising debt levels. CoreWeave has an almost 9 times debt to EBITDA ratio, with debt levels between 20 and 30 billion.
Our revenue growth in our last earnings call was to take the company from $5 billion to in excess of $12 billion by the end of this year. That ramp comes with enormous opportunity to drive margins as we continue to grow, but we need to have an opportunity to scale, and scaling is expensive.
Meanwhile, Nebius issued more than $4 billion of debt in mid-March to fund data center build-out, setting off a more than 20% decline in its stock value over the rest of the month. Many of the Neocloud companies are borrowing heavily to build data centers, betting AI demand will ramp up quickly. But some experts say those expectations may be overly optimistic, warning that the industry could face a 5 to 10-year grind before seeing real returns. And if growth doesn't materialize fast enough, companies could struggle to repay lenders or be forced into takeovers. Beyond the competitive dynamics in the space, there's another question hanging over the broader tech sector as a whole, which is whether the overall demand for AI will live up to the hype. For Neoclouds, they're betting big that the AI boom arrives fast enough to justify the billions being spent today.